In this video, watch a former part-time retail trader who blew up his trading account, but then rebounded to become a prop firm trader, present one of his favorite setups. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, a firm trader dissects in step-by-step detail a technical analysis trade that he labels an A+ trade. Let's get to work on sharing this recurring technical analysis trade so you can add it to your trading playbook. God, I appreciate you chatting with us about your comeback plan to actually trading with us on the desk. And so we talked about your thoughts as to your journey as to how you did that, and your advice to some of the independent retail traders who have blown up or done some silly things, and to keep at it. But to actually be able to go from, hey, I want to make a comeback after I blew up, to being able to trade consistently profitable, you actually need the strategies to go along with that as well. And so let's get a look at a recent trade that you made, which I suppose you have incorporated into your playbook, and see how you're doing on the strategy side as you work to your goal of, you know, I've come from comeback to a seat on the desk to your next goal, which is I want to be trading full time and give this my full attention, and see how good I can be from there. So let's check out your strategies.
Okay, so this is a simple strategy that I implement. It's just a daily resistance breakout using multiple time frames. So you're looking at a daily chart and then looking intraday price action to confirm the breakout. And this is going to be in Snap. Okay, so for this trade strategy, what you're looking for is key resistance levels on a daily chart. And ideally this level has been tested multiple times, so it's a clean resistance level. Ideally the stock is above the rising 20-day simple moving average. Sometimes they respect the 10-day moving average, but the 20-day moving average is a little more conservative. And you're also looking for volatility contraction on the daily chart, where the range is getting tight and the volume is starting to dry up. And you're looking for sectors that have relative strength. And then that stock within the sectors is showing higher relative strength than the other ones. So for entry into this trade, you're looking for the daily chart, and then intraday you're looking for one of these three setups, either an opening range breakout or an intraday pullback, a reclaim of VWAP and consolidation, and which a lot of people, I think the firm calls this a big dog consolidation or a wedge pattern. And then so you're looking for that breakout of that wedge. And so you can put on a full position just prior to the breakout, or you can scale into this. And your stop should be the low of the consolidation range or the low of the day, depending on the appropriate level. And some possible reasons to sell would be the breakout fails. The breakout initially works, but then it fails to hold above that level. The stock gets extended from VWAP intraday, or you see a big blow-off type pattern where you get a big blow-off volume and a big 1 or 5 minute candle to the upside.
Now, Scott, do you need a news catalyst for a trade like this?
That's the ideal situation, that you'd have some type of catalyst that's driving it higher, either an earnings win or some type of news event. In this particular case, there wasn't any news. It was just the sector was strong on this day. So just looking at the market, the SPY was nothing unusual. It had pulled back a few days prior, and it was just rebounding off of that. Looks like a normal pullback. And on this particular day, Twitter, Facebook, and Snap were all pretty strong. So there wasn't any news for Snap on this day.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Looking at the overall intraday fundamentals, Snap's a larger cap stock, average true range of 3.82, average volumes 20 million. It really didn't have elevated R-vol on this day, only 26 million for the day. But it did have R-vol on the 5-minute chart when it actually broke out. Short float 4% and 10% institutional ownership, 1.17 billion float. So once again, ideally you would have elevated R-vol on the breakout, but in this particular case it was a breakout through daily resistance with basically, no real R-vol on the daily chart.
What would your ideal R-vol be for this setup?
I think 3 is a good R-vol to have.
And because the R-vol is 1.25, are you factoring that in when you're thinking about your risk budget? How much you're going to risk on the trade?
In this case, I didn't, but I think that's something important to take into consideration going forward. Because a lot of these breakouts can fail if they don't have the volume behind them. Okay, so looking at the daily chart, this is where it's just a really clean level there at just over 65, where it had tested it like 6 times. And on the right side of the chart, you can see the range had gotten pretty tight over the past month between 60 and 65.
So I ask traders to evaluate technical levels from a scale of 1 to 10 just by themselves. When you look at that resistance level on a scale of 1 to 10, how important do you think it would be?
Yeah, I mean, just looking at it, it's kind of obvious it's a very important level. It's just it just stands out. There's no real question that 65, 20, I think is what that area is just a very important level.
Yeah, I mean, you've tested this 6 times. We've done this over the course of 4 months. I don't know if this is a 10 out of 10 resistance area or a 9 out of 10 resistance area, but it's at least that. You don't see a chart like this every day. This is a super important technical level that has got to get your attention. I mean, if it were to get above that level, that trade, because that resistance level is so prominent, that's something I want an alert for. That's something I'm watching if it gets above that area, just as a technical trade, without there being a news catalyst. Just as that is a technical trade in of itself. And a lot of times we talk about combining a news catalyst with a technical catalyst, but a technical catalyst can be a big enough catalyst in of itself, and certainly above that resistance area is a really good trade to be alerted to and to see if you can build into profitable trades.
Okay, so now we'll look at the intraday price action on the day of the breakout. So it had a big opening drive where it ran up and tested the breakout level. And so a lot of times momentum names, when they have these big opening drives, when they pull back into VWAP, you can actually, it's a pretty good trade to put on some risk at VWAP if it's going to continue higher. And so in this case, I didn't catch the initial move, but as it pulled back into VWAP, I put a starter position on, and it did crack below VWAP initially. And this is where I think it's important as far as position sizing to put in a smaller size on your initial bet. That way, if it does go against you, you can give it a little bit of wiggle room if your idea is still solid, because if you put on too much risk initially, the intraday fluctuations can get you stopped out. So in this case, this was about a fifth of my full position. So I held it when it cracked below, and then as it pulled under VWAP, it put in a double bottom right around 64, and then reclaimed VWAP, which was a very bullish sign. And the whole time I'm still thinking about that 65 level. And so as it reclaimed VWAP and kind of consolidated sideways, I started putting on more risk. And as it got tighter and tighter intraday, it ramped back up and tested again the level a couple more times before it finally broke. And I had full position size on, in the consolidation range there between 12 and 1 o'clock. And then when it broke out around 13:30, you can see that even though the daily volume wasn't elevated, that the short-term 5-minute candle volume, it was elevated on that breakout. So that was the confirmation that you needed that it was going to go. And so at this point, I'm just holding my position. And as it got extended, this was more of a feel exit. I just happened to exit at the high of the day. But ideally, you scale out and leave some on for a bigger move. But in this case, I exited all at 67. And this trade could also be a good catalyst or a candidate for a swing trade. And it did ultimately run over the next few days up to $70 a share. So this is just showing the executions through TraderView, where I put my first position on and then where I added, and my exits. So yeah, that's all this one is.
Where do you start buying?
Right around just over 65, maybe 65.60, or 60. I'm sorry, 64.60.
And then you buy there. I guess your stop is below 64.
Correct. Yeah.
How do you feel about the fact that it's actually not above that longer term resistance area of 65?
Yeah, since it hasn't broken out yet, there's a chance it could fail, and because the intraday volume is really, the daily R vol is really not there. But as far as like the intraday pattern is concerned, that the pullback to VWAP, reclaim, and consolidate in a tight range is a very strong pattern. And that right there gave me more confirmation that it was, or more confidence that it was going to go. That's kind of how I approached it.
And were you watching some of the other social media names at the same time?
Yeah, I did notice Twitter was strong this day. But there was, I didn't really watch Facebook, but I did notice that Twitter was also strong.
Well, what's more important, the fact that it's not above a longer term, very significant resistance area, or that it's holding intraday VWAP?
Yeah, I guess it depends on whether you're looking at it from a bigger picture perspective or not. But from, I guess, a day trade perspective, it's important to be above VWAP.
I think there's two really good trades here. I think there's a really good momentum trade when we actually get above that 65.40-ish area. It's not able to get above the intraday high, and then it finally does, and it's now above 65. It's held above 65. The shorts are going to have to cover. The longs are going to be fearful to miss out. The momentum is to the upside. You can make a really strong career playing the momentum when we actually get above those prices, playing the momentum with size and becoming a really good short-term momentum trader. That's a very good trade. And then the other thing that you can do is when it's holding that 65 and holding above that 65, to give that a run for a swing trade right there. And I don't think that's an intraday trade. That is a longer term trade. What we're seeing on the desk with some of the guys is they're taking entry and they're turning them into intraday trades, multi-day trades trading them distinctly, trading them with different rules. The intraday trade is going to have some different rules than the swing trade. And the stops are going to be potentially different. The entry can be very similar, but they actually morph into different types of trades. And particularly in this market, we're seeing guys have lots of success holding things for multiple days that are uptrending or breaking out and holding them. So I see two trades, and I don't really want to be. I don't want to be in the game of telling you how to trade, but I also want to point out that there's two trades that you can build a career on that I'm seeing in this opportunity. Above that 65 resistance area, super important technical level, not really trading below there, giving this a run for a multi-day swing trade because of price. And then a momentum trade because it's coiled and consolidated and there's winners and losers above that area. I think those are two pretty good trades. When you're trading, I think you want to be thinking about the big picture. And to me, when that's not above 65 and it doesn't have a news catalyst and it doesn't have elevated RVOL from that opening drive that's you said correctly above 3, I think you got to be thinking about that. So thoughts on that?
Yeah, that's great input, Mike. Thanks for that. Yeah, just to kind of reiterate, I mean, I can't really swing trade in the account yet, but this would have been one that I would have swung this one had I been able to.
Yeah, and guys will swing that with stock and they'll swing that with options and give that a run. And I mean, this is obviously a lot higher, although it had earnings. There was an intervening factor, it had earnings. But great level to be looking at. That 65 level is a super important level. I do think you can build playbooks that are holding below important technical support areas if they're really clean and they're really holding up. And I guess that's what you're saying. You're saying this is really holding up well, it's really clean, it's really holding the support areas that are and the technical indicators that are important to me. And because of that, it's foreshadowing that it's going to get above this 65 and I'm going to give it a run. I think that's fine. I would prefer if there was RVOL that was on our side. I'd prefer if there was a news catalyst that was on our side. But if you can make this into a trade, great.
So basically, overall, you want to see the intraday price action and the daily price action confirm. As we were talking about in our previous discussion is kind of oversizing and just putting on too much risk on trades that don't really warrant it. So it's one of those things that I'm continuously working on because I just have a natural tendency to want to do that. So my goals for this month is to only go big on the best trades. The next one is focus on a few key setups and trades that you're going to focus on. And it's easy to get distracted via social media or other people's ideas, etc., where you kind of lose focus on your key trade ideas for the day. So kind of narrow it down so that you don't get spread out all over the place. And then waiting for price action to confirm thesis. So if you see something on the daily chart setting up, wait for the intraday price action to confirm that. It's something that, I've had some really good days, but I've also had some days where I'm entering, anticipating versus waiting for the price action. And Snap was one that confirmed, and it was a good trade. And so I want to continue doing more of these type of trades and less anticipatory trades.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.